Today we're talking all things insurance with my good friend and colleague of over 20 years, Dane Shuri. My name's Greg Cummings with the Greg Cummings Group and Compass Real Estate. Welcome, Dane. All right, so Dane, tell me, say I'm a home buyer, and what's the most important thing I need to look at when shopping for insurance?
When you're buying a home, you would want to pay attention to the fact that the coverage on your homeowner's insurance policy may not align directly with the price that you're paying for the home.
All right.
Because your homeowner's insurance is based on the reconstruction cost of your home.
Reconstruction cost?
Yeah, so it's based on what it would cost to rebuild the home in the event of a complete loss. So you want to make sure that you've got adequate coverage to rebuild the home and all its components, from the foundation to the roof and everything in between, and all your furniture and
valuables
and everything. And because, as we know, over the last few years, everything has gotten more expensive.
Oh, yeah.
For example, if you owned a home for a long time and you haven't taken a look at your homeowner's insurance policy, you just pay the renewal check when the bill comes in, you may want to have a look at your coverage limits just to make sure that they're up to date.
Yeah.
The reality is that not all insurance companies insure all types of properties or properties in all areas. So it's good to have access to a wide variety to make sure that you're able to insure your property at a competitive rate.
Are there particular reasons why you're seeing they're not covering certain areas?
Well, insurance has become more complicated, and some properties have just become more difficult to insure because of proximity to wildfire hazard zone in California, unfortunately, and distance to brush, steep slopes, and then past claims are affecting people's ability to get insurance as well.
Yeah, so things like a flood or something like that might have happened on the property previously.
Yeah, if you have a broken pipe more than once in the same property, it sort of becomes stigmatized in the eyes of the insurance company, and they may not want to take the risk.
I mean, I've even heard that some insurance companies are completely moving out of California. Is that true?
That is correct. There are several large companies that have decided that they're no longer going to be issuing property insurance in California for the time being.
So along with a lot of the people that are leaving California, a lot of the insurance companies are leaving California is what you're saying. All right.
I guess they think there's 49 other states.
So tell me a little bit about exactly what your homeowner's insurance premium is based on.
A great question. Homeowners insurance is based on reconstruction cost.
Okay.
So when you're shopping for homeowners insurance, you want to make sure that your coverage limits are adequate to rebuild your home in the event of a disaster. Homeowners insurance is broken out into coverage sections. To cover your dwelling, that's your house.
Okay.
Other structures, that's everything that's built on the property that's not part of the house. Your personal property, and your loss of use. That's coverage to put you up in a rental in the event that your house is deemed uninhabitable due to a covered loss.
So, here we are in California, arguably one of the most litigious states there is. Tell me a little bit about making sure I'm covered properly under liability.
So liability coverage is part of your homeowner's insurance, and it's really important that you have adequate liability coverage in the event someone's injured on your property or by you while you're out and about anywhere in the world. A lot of people don't realize that your homeowner's insurance liability coverage actually follows you around wherever you go.
I did not know that.
Another thing that people ought to take a closer look at is umbrella insurance. Umbrella insurance is excess liability coverage that goes above the limits of your underlying home and auto policies.
Okay.
So, for example, if you're in an accident and you're at fault and you have assets and the injuries that you caused to the other party, if the value of those damages exceed the limits on your auto policy, your umbrella policy will pick up at the exhaustion of the limits of your underlying auto policy. Same thing goes for your home. So umbrella coverage, because it's excess liability coverage, is actually very affordable for what you get.
Well, that's good to know, just in case I were to get in that kind of situation and I need more than what my policy will cover.
Well, the reality is the more assets that you have, the higher levels of liability coverage that you should carry on both your home and auto policies. I've seen quite often when folks are carrying low limits on their auto policy and they may own 2 or 3 properties. It's a huge mistake that can be corrected very inexpensively.
This is great information to know. So what's something that really you found catches people off guard when it comes to their insurance?
One thing that I think caught a lot of people off guard this winter in California is flood insurance.
No surprise there.
All properties are given a flood zone determination when we run it through our rater. And most people aren't required to get flood insurance because they're not in a high-risk flood zone. But the reality is over 25% of all flood claims occur in the flood zone that is the least likely to have a flood occur.
Go figure.
It's not what we expected because it never rains in California, but it did this winter.
Yeah, more rain than Seattle, right?
So it's something to think about for sure. If you're in an area where you think you might be prone to a flood, maybe worth taking a look at flood insurance.
Well, another thing that comes up quite often here is earthquake. What about that?
Sure. Well, no homeowners insurance policy covers earthquake or flood damage. So if you're interested in earthquake coverage, you have to buy a separate earthquake policy. Same goes for flood. And you can get a variety of types of coverage under your earthquake policy, along with low or high limits, as well as a variety of deductibles.
So let's say I'm living in my primary residence and I decided to keep that home, but I'm moving out of it to another home and I turn that into a rental. What do I need to know about insurance?
Homeowners insurance is written not just specific to the type of property, but how it's being used. So if your home is your primary residence and then you're going to turn it into a rental property, that's great. You just need to have your policy rewritten as a landlord policy.
Okay. And what would happen if I didn't do that?
Well, the problem with having your homeowner's policy incorrectly written can be that in the event of a loss, if you go to file a claim, the insurance company may not cover the claim.
So they literally could come in and say, oh, wait, you're renting that out now. Sorry, that's not going to be covered.
It's possible.
That's something that I don't think a lot of people know and they need to be aware of.
It's very important if you do make changes in the use of a property that you own to let your insurance agent know. Same thing goes for if you make any substantial upgrades to the property. Let's say you add a pool or you put a hot tub in the backyard.
Right.
Make sure you let your agent know so that they can add that to the policy so that you've got correct coverage.
Since one of the hottest topics right now in San Diego is Airbnbs, let's say I want to have an Airbnb. What do I need to do to make sure I'm insured there?
That's a good one. Short-term vacation rental is another type of use of a property. Like we just talked about the property needing to be insured correctly according to its use. Some carriers do provide coverage for properties that are being used as a short-term vacation rental, and others do not.
So you're telling me real quick here that just because I'm renting it on a short term versus a long term completely changes the insurance landscape.
That's right. So insurance companies rate a property according to its risk. In fact, they don't refer to a property as a property, they refer to it as a risk.
That makes sense.
When you get into a short-term vacation rental, they know that they've got more people coming in and out, which leads to a higher likelihood of a potential accident, which might result in a claim.
People are partying a little bit, having fun. There's a little bit,
Yeah. So some companies do provide policies that allow for short-term vacation rental use, and other companies do not. So it's very important to reach out to your agent and let them know and ask them if any changes need to be made on your policy.
Having sold a lot of condos over my career, one of the misconceptions I see sometimes is the buyers see that the HOA covers the insurance and they think they're insured. But tell me, are they really insured?
Well, some homeowners association master policies cover just the exterior of the building and liability for the common areas of the HOA. However, some condo policies or the master insurance policy for the HOA actually do provide walls-in coverage.
Oh, okay. Good to know.
But for the most part, what we see around San Diego is that the Homeowners Association master policy covers the exterior of the building, the roof, the exterior walls, your walkways, the common area, but they do not cover the walls in of the condo. So you're literally, when you buy a condo policy or a unit owner's policy, you're literally insuring from the walls in. So that in the event of a disaster, you would have to rebuild your interior part, the floors, the cabinetry, your countertops, your fixtures, your appliances. So you want to make sure that you have adequate coverage for that.
And now if you're using a loan, they're going to require that, of course.
They do require it.
Yeah.
And most lenders, when doing an approval on a condo project, do review the Homeowners Association master insurance policy just to make sure that they're satisfied with the level of coverage for the exterior of the building. And then they also take a look at the condo policy that the new buyer is obtaining for their purchase. So the condos around California, especially now, are becoming even more challenging with regards to insurance. And here's why. Some homeowners association master policies are being dropped by the carrier that has maintained the exterior building coverage for years. They're now dropping the policy due to the risk of wildfire hazard. And so what's happening, what we're seeing happen, is that the HOA is having to vote and instruct all the owners of the individual units to go out and insure their condo like a single family home, where they're being now required to provide coverage for the exterior of the building as well.
Well, there's a little surprise for you probably weren't expecting. Dane, I've heard some companies are not insuring properties for fire. Could that be true?
Unfortunately, yes.
Wow. All right.
Some carriers have decided that they don't want to insure the property for the peril of fire. And so what has happened is in certain areas, you may have had some clients who have received what's called a non-renewal letter on their insurance policy. And they may have never made a claim, and there may have never been a fire in their area. And suddenly they're being told that their home is now in a wildfire hazard severity risk zone, and that they're no longer going to be able to be insured by their longtime insurance company. At that point, it's important that your clients know that there are companies out there that have different thresholds for risk when it comes to the risk of wildfire. However, there are some areas where no company at this point will insure homes for the risk of fire. And those homeowners, we have access to the California Fair Plan. And California Fair Plan picks up the risk of fire and a handful of other causes of loss. And that policy dovetails together with what's called a difference in conditions policy issued by the insurance company. And those two policies dovetail together to form a complete set of coverage for the home.
So I can't get covered for an earthquake. I can't get covered for a flood. I can't get covered for a fire. What the heck can I get covered for? All right. So Dane, let's say I'm going to buy a fixture property. I mean, that's a very common purchase out here. You want to buy it, you want to fix it up, put your own taste in it. Am I covered during the renovation process?
Well, there's a lot of older homes around San Diego that do need a lot of work. And for those with the stomach for a fixer-upper, it's important to know that your homeowner's insurance policy may or may not cover you in the event of a loss while your property's under renovation. And it can be kind of complicated because it depends on how much of a renovation you're going through. Are we talking about paint and carpet? Or are we talking about moving walls and completely tearing out all the plumbing?
Right.
That's a great question for your agent. When you get a homeowner's policy, if you're going to do renovations on the property, make sure that you let them know and talk about the extent of the work that's going to be getting done. Because a lot of times the company can add what's called a course of construction endorsement to your policy, but some carriers absolutely do not offer that, and you may need to rewrite your policy with another carrier altogether.
All right. Well, the bottom line here is if your insurance broker is not getting back to you, you got to call this gentleman right here. He can review any of the policies. Known this guy for close to 20 years now. Best in the business. Dane Sharif, thank you so much for talking to me today.
Thanks, Craig.
All right.
Thanks for having me.